I'll start this recording. So, what an edge is it's something that gives you an advantage so that when you are trading in the market, you will have rules that keep you safe and data that lets you know that these edges work. So here's just a quick example. Can you guys, is this visible? Can you guys read these? Let's see if I can make them bigger. So these are just some of my edges, right? So second day plays, AMD is a stock that I trade, just AMD. Open range breakout. Remember I talked about this one this morning. So these are all edges that I've made. And when you make an edge, you want to have rules and all that kind of stuff that you follow. And let's see, the TTM squeeze here, this is Nate's trend pattern squeeze. That's his edge, right? So how many of you guys know the rules to Nate's edge? Trend pattern squeeze. That's what the TPS stands for. But for every edge, you need to have rules that you follow and defining how you find your stocks and all that kind of stuff, right? So today we probably have time for one, maybe two edges. Maybe we can get to one or two, but does anybody see an edge on here that just is screaming out to them, hey, I want to learn that. I want to learn about long-term value. I want to learn about scalping. I want to learn about unusual options activity. I want to learn about second day plays, catalyst plays. Or, is there anything that is you guys are like, hey, let's learn about that one? And what I'll do here is I'll start with the TPS edge. Okay. Scalping, second day play, open range breakout, float rotations fun, unusual options. Oh, so we got a lot. Well, here, guys, one thing I'll tell you, I can't get to all these, right? But what I'll tell you is I teach these in this room all the time. And today is the last day that you can have the $300 off. So you've got the winter 300 code, right? The next person that signs up, you pick whatever I want, whatever you want me to teach you, and I'll teach it, okay? And I'll teach the rest of these. I can't teach them in 1 week, but if you give me like a month, we can get through all these edges, right? And so this is something that I can teach you guys. And then you can pick which edge you like the best, right? And then you can say, hey, this one's more my style, so I'm going to really focus on this one. Okay, so for right now, let's do Nate's TTM squeeze TPS play. Now, and I can share this document with you as well, okay? And for all these edges, I've got documents that say, hey, these are the rules, right? So in the TTM squeeze, it says these are the parameters that I use when looking for these setups. There's often times that I go outside of the parameters. However, these are the ideal setups. And so within 10% of the 52-week high, over $25. Sometimes I'll get as low as 20. You want to at least have an average day volume of 200,000. You got to have at least enough volume to get in and get out. If you have higher short interest, it's even better, right? And the must be in the TTM squeeze, okay? So, does anybody have any questions about the squeeze? Does everybody understand the squeeze? Like that's the must. That's what everything is based off of. So if you look at this chart, Kimco Realty, if we're looking for a squeeze, right? We can see these red dots here are telling us that they're in a squeeze and that the Momo is starting to shift, right? So anytime that you're looking for a trend pattern squeeze, this is the squeeze that you have to have. And if you don't have it, I can give it to you through TC 2000. But if you need it through like TradingView or Toss or something like that, I think Nate G has all those. This program is TC 2000. Okay. Now here's the other key part of the TTM squeeze or TPS edge. You need to always play the same time frame that you bought it in. If you're playing a 78-minute chart, you can't say, okay, well, I'm going to switch it now to a 195, right? Or if I'm playing a 15-minute, say, oh, well, you know what? I'm gonna switch this. Even though I'm supposed to stop out, I'm gonna switch this to the daily, right? You want to stay with whatever time frame that you've bought. Okay. If you bought using the 78-minute chart, use the rules according to that time frame. Okay. Now, it's better to use the longer time frame squeezes over the short. What that means is if a 78 130 daily squeeze are occurring, use the daily time frame, right? However, if you're wanting to get on a chart and it's not coming back to the ADMA like on the daily, maybe it'll come back to the ADMA on the 130, and then you could play it that way, right? But just make sure you stick with that time frame. Now, here's the number one rule about entry. You must buy below the 8 EMA. Why do you think that's a rule, guys? What does that help us do? So if we find a stock that we like and we're like, man, this looks good, right? Oh man, I want to be in this, right? And we're like, man, I got to get in this. Man, I want it. I want it real bad, right? Well, what it does is yeah, exactly, Kelly Kid. It stops us from chasing. How many of you guys see a stock moving up and you're like, I want to buy it now? Right? That's just natural. We want to buy things as they're moving up. That's why sentiment follows price. And how many of us, when things are going down, are like, I don't know. This looked good a few minutes ago, but I don't know about now. Right? Well, this is helping us say, you know what? It's okay to buy pullbacks. In fact, wait for it to get back below the ADMA. And this is taking VP out of it for right now. If you can buy between the 8 and for me, I put in the 34 EMA. This is my rule. I think Nate likes his 21. So Nate likes to buy it between the 8 and the 21, right? So depending on the strength of the stock, trend will determine where I enter. The 21 EMA entries are common for me. I size in, meaning I do not buy a full position at one time. I'll buy 1/4 at 8 EMA, 1/4 at 21 EMA, 1/4 at 34 EMA. Can play out the lower Bollinger Band as well. And this is the key for me. Use VP, determine, VP is volume profile, to determine the best entry. And here's how you stop out. You stop out with a close below the lower Bollinger Band, or if you have a predetermined stop loss. Okay? Now, let's just put this into practice, what we've got. Well, here, let's read the extras. The more squeezes on the time frame, the better. So, example, if you have a 15, 30, 60, 78, these are called stacked squeezes, right? That's great. That shows there's a lot of, like a spring, there's a lot of tension built up and it's ready to explode. And these are the kind of charts that you want to see, right? This is the woodpecker, the bird patterns, right? Everybody recognize these. Here's one that looks on real time, and these are what we're looking for. Okay, so let's just go through and see if we can. Yeah, thank you. Exponential. An EMA is an exponential moving average. So here, let me bring you to a chart. So this is Kimco Realty Group. This is a company that is in my watch list that I'm willing to play. Right? I think they're a good company. I think they're more likely to go up than down over the next month or two. You know what I mean? Like I'm not buying companies that I think are horrible. You know what I mean? This isn't used for low float momentum plays. Now, this stock you can see is actually underneath 25, right? So it's a $23 stock. Okay. Well, besides that, do we average 200,000 a day? Yeah, look, there's 3.2 mil, right? So the average is 3 mil. That's the average daily volume is 3 mil. Okay, so that one checks it off, right? So where'd our rules go here? There they are. Oh, is it within the 52-week high? Let's see. Yeah, we are within 10% of the 52-week high, right? There it is. So right here up at highs. So, right, check, check, check. Does it have high short interest? I've already checked. Not too much. That's okay. Is it in a TTM squeeze? Can you guys tell me right now? Is this in a TTM squeeze? Not on this time frame, right? On the daily, there's no red dots. However, I use SAM and I use TC2000 to tell me if there's edges. So like if you look at this Kim right here, these little check dots or checks right here are telling me that there's squeezes. So what this is telling me is, hey, there is a squeeze on the 195 and there's a squeeze on the 130. All right, let me go down to the 195. Now, is there a squeeze on the 195? Yeah, there is, right? Okay, great. So now there's a squeeze, and if we buy off this 195, right? We need to stay within the 195, the time frame. So the next rule is must be below the 80 MA. Is it below the 80 MA right now? Well, the 80 MA is this green line right here. Okay. Line width. So here, make it real thick. So can you guys see this green line right here? This green line is the earliest that we could have bought it, right? So price is actually above it right now. So the answer, can we buy it right now? The answer is no, right? But could we have bought it today? Did today give us an opportunity to try to buy this? Because here's today's candles, right? These last couple. Well, yeah, this one came down into the ADMA, and we could have bought it, right? So by not buying it here, it's keeping me from chasing it. I need to follow my rules. Yeah, here, do I have a link to the rules? Here you go. Oh, wait, Mod, I don't know if you're here, but I think you guys have this list on the DPL site, right? Don't you have a? I can share the Dropbox link, or if you guys already have that, then you guys can share that. Okay, so we have to wait for it to come back to the ADMA. Well, is there other areas that I would like to buy this? And so to do that, we need to start breaking down the VP levels. And as you go back and you look, the only VP levels that we really need to break down are right here. Right? Because the stop out is below this lower Bollinger Band, right? We don't want to play it if it's coming back down into here. So these are the only people that we're playing against. So I'm going to zoom in to like a 5-minute time frame and kind of get the VP of these levels. Yeah, so value area low here is really about 23 of this upper area. Hello, noob here, trying to learn. What's up? Is it Jave or is it Jave? Is it Jave? Yeah, we were all noobs once, and we all had to learn, right? So the next ad would be this low here, and then at worst case scenario, 2280. So now I'm going to swing it back to the chart time frame we're playing. And so now I've got the entries that I want to take on Kim. Right? So like I'm going to put these green arrows over here to the side, right? You've got an ADMA, and the low side was 2280. So do you see how that's down here? That's out of the lower Bollinger Bands. Well, the rule for stopping out is you need to close below the ADMA, and then you'll stop out. So what I'm going to do is I'm going to say, all right, I'm going to put in an order to buy at the ADMA. I'll put an order to buy down here right around 23, and then I'll put another order down here around 2280, right? So now I've got this box that I'm willing to buy in. And that's what I'm talking about right here, where it says I'll buy a fourth, a fourth, a fourth. On this one, you can buy a third, a third, a third. And the stop out with close below lower Bollinger Band. Okay, so now we've got everything set up for this Kim trade. This becomes a TPS, right? Trend pattern squeeze, play with rules, defining your edge, defining your entries, defining your stop losses. And this is what allows you to trade safely within a market. So what I want you to do, how many of you guys were here this morning for the presentation and heard me talking about the tiger? If you weren't here this morning, put a 4 in chat if you need me to go over the tiger again. You guys missed it? Okay, here, I'll just do it real quick. So when we were evolving, when we were cavemen, we had to go out and get food. When we'd come out of our cave, you would see tigers, and they would scare you, right? And you're just naturally programmed to remember where that tiger was. Yeah, or the lion, whatever whatever animal was going to kill us. I forgot. Um, and so in trading, what we tend to do is we focus on fear and dying because the tiger is going to eat us. So what I want you to do is I want you to think of an edge like this. An edge is like a cage. And this cage protects you from the lion. And you've got this cage that has a opening into your cave, and it goes all the way around the tree that you're trying to get the fruit from. And so with an edge, you can go out there and you can get the food and stay safe, right? So again, I'm not a great drawer, but over here's your lion, right? Relaxing, having a good time. That's a great line, right? And here you are in your cave, right? And here's the tree. All right. What color should the fruit be today? Let's make the fruit blue. We'll make it a blueberry tree again, right? Here's all your blueberries that you want to get. Well, without the cage, right? You're going to walk out here, and this guy's going to go, "Yummy, thanks for dinner." Hump, hump, right? But what an edge does is it says, you know what? We're going to put a cage all around this. So now the lion can't get in, right? We've caged the tiger. And so now you can freely walk out there, and the tiger's going to go, rawr, and he's going to come at you, and he's going to hit this cage, and you're going to be like, "Oh, you're such a cute little tiger," right? Because you're not worried about dying. You're like, "Hey, you want some blueberries, buddy?" You know what I mean? Your whole outlook shifts because you're safe. And that's what edges do for you. They give you a set of rules that keep you safe. They give you a likelihood of winning that's higher than 50%. And this is what allows you to trade freely. And honestly, you just don't care what it does. I don't care what the stock does, because I know over time that this edge pays out. Come for trading and stay for the drawings, right? Okay. So does this make sense to everybody? Did the mod share this yet? I don't know if the mod shared this or not, but here I'll put this Dropbox in here. So you guys can take that, download it, adjust it however you want. Okay. Now here, let's just review. This is just one edge. Runo, that would be Nate G. He would have it for toss, think or swim. Now, what is an edge? Does everybody know what an edge is now? It's a technique, approach that creates an advantage for you to the winning side, and it keeps you safe, right? That's what an edge is. And so for all of these edges, you're going to have rules. You're going to have how you enter a trade. Now, let's see. Let me close this out. Give me one sec, guys. Yeah, Jordan. I think I just did that. Yeah, is that what you were talking about, Jordan? So I just shared that document. Um, I think that's what we were referring to. Okay, now let's. I'm just going to kind of mention a couple other edges, and we'll go into detail on one of them that's a little bit shorter. That we only have about 30 minutes here, and then I'll kind of explain a little bit of one. Um, who my 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 entire life, excuse me, I've been a business owner, right? Man, sorry. So my natural way of thinking, the way that I've kind of programmed my brain to think, is to try to find good companies, right? And so what I would do when I was looking for companies is I would create an edge within the company to say, hey, these are the rules and this is what I need to see and blah 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 blah. It's the same thing. And so what I want to show you here is this right here was the edge I used for buying Subways. Now, when you got in and you bought the Subway, it took execution, right? But this was the cheat sheet that I used. For those that don't know, I was a business owner. You know, I ran Subways, ran Sport Clips, and some others. Um, so my natural way of looking at companies is to look at it like this. And what I've got here is DIA. It was that's Subway Doctors. Anyway, they took out 8.5% for royalties and 4.5% for for advertising. So what I would do is I'd come in here and I would look at all the costs of the company. Right now, I knew I could run labor around 29-30%. I'm sorry. I ran labor around 20 to 22%. I ran food around 30%. And so I'm putting all these numbers in. I'm putting in all the costs of everything, your alarm, pest control, whatever it is. And then I would put in the total net sales. And then at the bottom, it would be like, this is how much this company makes in a year, right? And then I would say, all right, we would assign a value to it. Is it a EBITDA value? Is it a 2? Is it 2.5? Is it a 3.5? Is it a 4.5? And that's what would determine the price, right? And so when it comes to value investing, it's a very similar thing that I do, right? So on my value investing document for the edge, right? I'm explaining value investing, what to do, how to do it, breaking it down. Now, this one is an extremely long edge and it's very complicated, and we can do this one. Maybe we can do this one next week. We would need to spend at least 1 week going over value investing alone. But this is just, I wanted to show you this one because this is what I'm comfortable with, because this is what I did. So every person is different, and you're going to gravitate towards certain edges over others. And there's no wrong or right in the market in doing that. But what you want to do is figure out whatever you're good at doing. Maybe you're a nurse. Maybe you should trade a doctor. Maybe you're a biotech. Biotech may be your thing. Let's come up with an edge with biotech, right? And make trading your own, right? And then you can kind of grow from there. And so, how many of you guys are interested in value investing? Like, how many of you guys, and what value investing means is you're not trying to get a 100% winner today or tomorrow or next week. You're trying to find companies that are going to grow and are going to pay you out over the long term, right? And so, if you guys are interested in this, again, sign up. We can start this next week, and we can go over value investing. But a quicker one that we can do right here, right now, before we have to get off, is the second day plays. So how many of you guys have heard me mention second day play in here? Even the new guys. We had one today. Do you guys remember what the second day play was today that I was playing? Does anybody remember the ticker that I was using for a second day play? Yeah. Kelly Kidd got it, right? SMMT, Pete. Right? So let's look at it. This is the second day play that we were looking at. Right? Now, let's look at the rules. Second day plays. We need some type of catalyst, right? I don't want to trade something that doesn't have a catalyst. That could be an earnings report. That could be good news. That could be a AdCom, approval for biotech. That could be somebody wins a lawsuit against the DOJ, and so they don't have to split up their company, like Google. Anything that is a catalyst that triggers 2 times RVOL. Now, what RVOL means is relative volume. So let's look at SMMT. If we come over here and we look, what's the average volume being traded on SMMT? So this day it was 1.4. On this day it was 2. On this day it was 1.7. On this day it was 2, 2, 2, 1, 1, 2.5, 2. Right? So you're around 2 million on SMMT, right? It's about 2 million. Well, how much did it trade yesterday? 48 million. So does that qualify? Is this 2 times RVOL? What that means is that if you were to double the regular volume, which that means it would be about 4 million, right? Well, yeah, we were way above that, right? And so now that we've got that checked off, great, wonderful. Now, bonus, if it finishes strong and holds the top 20 to 30% range for long or short, however you want to play it, right? When you have a company that finishes extremely strong and finishes something like if it went like this, right? Let's say we finish up in this area. You got this nice little flag. Maybe we can get a little gap up, right? That maybe if it gaps down, that's an opportunity to buy, right? And so that's just kind of a bonus. Now, the safest way to do this is actually to wait till 10 a.m. I personally do not do this. I go ahead and trade beforehand. But you get a lot of fluctuation between 9:30 and 10. And that means better returns if you take more risk, but also lower win rates and vice versa. Now, here's what you must do before taking the trade. Right? These are must-dos. Find PP from previous day. What a PP is a pivot points. So what you need to do is you need to come in here and find these pivot points. So what I did this morning and showed you guys was I took yesterday's volume, price action. Here, I'm going to take out today's. Right there. And you can see, here, I'm going to take these off real quick. You can see that you've got a pivot point right there, right? You've got your main pivot point, your main point of control between 1896 and 1946, right? And obviously 20 is a mental level, right? So when I was looking at this, what did I tell you? When was I going to get into SMMT? Roxana, I will share everything I got with you on TC2000 if you join. Well, 100%. I'll even send you a video of how to apply it all, okay? And I'll walk you through it too. That's the beauty. So Roxana, what she just asked here, guys, is, hey, if I join, would it be possible to have your TC2000 layout? Absolutely, Roxana. When you join your family, right? We're all part of the family, and I want you to have all the tools that I have. And we literally sit here and walk people through it. And a lot of us aren't tech savvy like myself, and it takes some time to figure this stuff out. And so it's good to have somebody there to help walk you through it, right? So yeah, of course, Roxana, absolutely. And so what I said was, guys, as this starts breaking above the anchored VWAP, that's my buy, right? That's me looking to buy. That's what I want. And so I've done the pivot points. I've got everything marked up and ready to go. If you're a good tape reader, it's important to understand the key levels from the previous day, because oftentimes the big boys will hold a line. Now, this is also visible with volume profile. And when you find these levels, it gives good risk reward. And then the next thing is find any overhead resistance from trap traders. Okay. So as we're looking at, as we're looking at this SMMT, if I'm buying as we break over this level, right? Now with the pivot points that I found, where should the next resistance point be? Just using what I did today, just now. Where would that be? No, it's not 1946. Yeah, it's 2125. Right? So does everybody see that? Does everybody see this line right up here? If I'm buying over that, well, that's the next resistance level. All that means is as we hit that level, we should reject. And when it does, don't freak out. It's normal. In fact, it might be an opportunity to add to the position on a pullback. And then we'll consolidate and try to break up over it. Yeah, if you want to get TC2000, guys, you can just... Here, let me get something real quick. I think this link will give you like either a month free or $20 off or something like that. It's up to you, whatever trading platform you want to use. Don't keep in mind that Nate G and Nate Bear also use Trading View, right? So there's no wrong or right trading platform that you have to use. I prefer TC2000 because it gives me better VP details. So, all right, we've identified those levels. We found the overhead resistance, right? Now, that's your play for second days long, and this is a play for second days short, right? And then I go through all of that. So let's look at today of how this played out on SMMT. Let's pretend that we don't know what's coming. We don't know what's happening, right? And we've identified this level. Now, on a second day play, you can also pick like a value area low and say, hey, I want to buy off of that, right? If you're looking at this and you're saying, you know what, if this comes into this area, right, over here, yeah, I want to take a shot at it. It was great news. These are all things that you can do. There's not a wrong way to do this as long as you're staying safe. For me, what I wanted to do today is I was like, you know what? Let it chop around down there as much as it wants. I want to be in it if it gets over this level, right? As it gets into my zone, right? Remember how I was talking this morning? This zone is where I want to start playing it. And hopefully within this zone, I'll be able to buy and sell some, that I can scalp some out, and then I can take it to the next level, sell some, and then I'll have a free trade set up, right? Because this is my entry. Okay? So I think it went down this morning. It pulled back a little bit. And here we go. All right, we're back into this zone. For me, this isn't quite a buy yet. Let me explain the way that this works for me. When I've identified this zone, what I want to see is that anyone, right? Anyone that bought in this area is happy. I want to know when all these people are happy. How would I know that, guys? What would tell me? What would tell me that? If I'm waiting for all these people to be happy, what has to happen? Yeah, price has to go above them all, right? So if price comes in and does this, is everybody happy? We made it right here. Is everybody happy at that point? I wait for smiley faces, right? No, it's not. They're not all happy. Right? Well, what if we do that? Well, not quite. Once we touch this top level, what does that mean? As soon as we touch this top level, think about the psychology of it here, guys. If you bought yesterday, if you're like, you know what, this is closing strong, I like it, and you bought at 1945, right? What are you going to do if it opens and goes down? Well, you may stop out. That may be one of your options. So you either got triggered to stop out, or now you're like, man, just come back. How many of you guys have ever been in this situation? Oh, I'm down on the stock. Oh, just come back to break even. Let me get out even. And you start saying prayers to whoever you worship, you know. Please, please, let me get out of this break even. I bought 100,000 shares. Now I'm down $2. I'm down 200 grand. Man, just let it get back to here and I'll sell out break even, please, right? Well, if it does come back to here and that's you, guess what? You're going to sell. And if it gets above that price, what that means is anybody that was going to stop out and was going to sell when it gets back to this level has done so. Right? Obviously, it's already happened. Either you're not going to stop out if it goes down this low. You've already done so if it gets back to this level, or you're not planning to sell until further away. And so now, once everybody is happy, that's when I'm like, I want to be in a stock where the longs are happy, right? And so you can see the anchored VWAP here, and what happens is we're trying, oh look, boom. What did we do? We hit that level. So at this point, if there's any bag holders that we're going to be selling within here that wanted out break even, they're doing so. They've done it. Right? And so to make a stock start going up versus going down, what you have to do is you've got stock owners with price around here. You have to sell these to new owners, right? It's like price went down, they're sad, it comes back up. Well, these new owners, they're buying and their average is down here. So the price may be back to here, but now we've got happy stock owners versus sad stock owners, right? Because the average cost has gone down. At this point, see how we broke over VWAP? We're starting to push, and now we're starting to consolidate within this zone, right? Does everybody understand what's happening here psychologically? It's like, okay, we hit some, let's get out. Let's sell to get out. Oh, we hit some more, let's sell to get out. Oh, we hit some more, let's sell to get out. But now that we've hit this zone, you're having dip buyers willing to hold this level, right? This level that I pre-identified before the day even started. Now, you have a couple options of how you want to play a breakout. You can, once it's done this, you can say, all right, this is how I do it. I create a zone that I want it to stay in, right? Here it is. Now that it's hit this top level, I can buy within this zone. And my risk is literally this zone. I don't want to go back below this zone. So on a pullback, do I want to buy on these levels? Yeah, sure, that's fine. The risk is here. Do I want to wait? Yeah, you can do that too. Do I want to wait for a breakout of this level? Sure, you could do that. Right? So you could buy that breakout. That's fine. Well, what if you want to wait on a retest of the breakout? Yeah, that's fine too. So again, there's a million different ways to skin a cat, right? Isn't that the saying? So we could buy in here, risk here. We can buy a breakout. Just FYI, if you are buying a breakout, I would keep risk tighter, or a retest, right? I would keep the risk higher. At this point, if I was buying a breakout, I would use the point of control, which is about the anchored VWAP level, as my risk. Same thing on a retest. You could buy that. So we had 1, 2, 3 different times that we could have bought this for the second day play. So do you guys understand how powerful volume profile is? How it keeps us safe from the tiger? How it allows us to set rules to get in plays that turn into this? Oh, what do you know? Look, guys, as we're approaching our level, we rejected. Remember what I said? If you were to see this and seeing it pull back, you should understand you're going to get some rejection up here. You got a little bit, but it's okay. Maybe it's a buying opportunity, right? Oh, look, we broke through it, and now we're higher, right? So in this particular instance, it was a buying opportunity. You came back and you retested this flag and went. So do you guys see the power of the second day play? The power of volume profile? The power of having a plan? The power of understanding what an edge is and having a cage that keeps you safe? So there's a tiger over here and he's ready to eat me, right? So here's your tiger. He's like, rawr, you know, roar. My great drawings. And I'm in my cage right here, and you know what I'm doing? I'm like hitting my friend next to me or my wife, and I'm like, hey babe, check out that tiger over there. Isn't he beautiful? instead of saying, oh my gosh, there's a tiger, run, we might die. My whole paradigm shifted. It's like, oh man, that tiger is beautiful. In fact, I've got some Ritz crackers. Maybe I can throw some to him and I can get him even closer to the cage. Come here, tiger, 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 right? And I see the beauty of what could be. Woo, look at that. Instead of, I'm going to die because the tiger's going to eat me. I'm enjoying these blueberries now, guys, right? So this was an example of the second day play that was put into action. That wasn't even my idea, right? This came from Nate. That's the beauty of being in a room. Nate comes up with a trade. Did Nate trade it this way? Did Nate trade it via a second day play? The rules that I just set up? No, he didn't. But he came up with his plan. He did his thing with his edge. I did mine. I made it my trade. Right? And we're both making money. And we're both happy. We're both enjoying the blueberries. Right? And that's the power of edges, setting things up, following your plans, obeying your rules. I thought Tiger just liked Frosted Flakes, right? Hey, what's up, Nate? You just sold some SMMT? Beautiful. I love it. Yeah, I am. I'm recording. I'll upload this for YouTube.